how to use an investment company as your wealth engine. This is what I've seen wealthy families do to build long-term stability. Today we're talking about using a dedicated investment company to protect profits, build wealth and separate risk, because this move will change your life as a director. Let me start with this. Yes, a holding company can invest in stocks, gilts, ETFs, whatever, but I don't recommend it, and here's why. Your holding company is the brain of your entire group. It owns the shares of your trading companies. It holds your control. It holds your voting rights. It holds your dividends. It holds your decision-making power. You don't put your investment risk in the same place as your control risk. If the holding company ever gets dragged into dispute, you don't want your investment portfolio tied up in that mess. It's much cleaner, safer, and more scalable to isolate your wealth into its own entity, separate from your business operations. That's why wealthy families create a dedicated investment company. What an investment company actually is, it's literally a company that exists purely to hold and grow wealth. It doesn't trade, it doesn't take customers, it doesn't sell anything, it doesn't carry operational risk. It is safe, clean, simple, low maintenance, tax efficient, legally protected, and you can put almost anything inside it. Financial investments, stocks and shares, ETFs, gilts, bonds, money market funds, corporate treasury assets, long-term cash reserves, intellectual property, even property SPVs underneath it. This is not financial advice, it's structure, it's strategy, it's architecture. Why wealthy families use investment companies? Here's the truth high street accountants don't teach. The wealthy separate where they make money from where they store money. Your trading company is where you hustle. Your investment company is where you grow. Key reasons are: number one, asset protection. Trading company gets sued, investment company is untouched. Number two is risk separation. Clients, contracts, employees, all risks live in trading. Your money lives somewhere else. Number three is tax efficiency. Investment companies pay 19% CT in some cases, 25% CT in others, but no personal tax until you distribute profits. Number four is group level lending. Your investment company can lend to your holding company, your trading company, your property SPV. This is how wealthy families self-finance their entire empire. Number five is succession and family planning. It's clean, it's separate, it's easy to share, it's easy to hand down, it's easy to ring fence. So how do you structure it properly? This is the most important part. So here's the clean professional structure. You have your holding company at the top, trading company underneath, investment company. The holding company owns the investment company. This keeps control in one place. Profit moves from trading to holding, dividends, management charges, IP licensing. The holding to investment company is dividends or intercompany transfers. Investment company builds the portfolio, completely isolated from trading risk. This is the model used by wealthy families. High growth CEOs, property empires, long-term investors. So what can you hold inside an investment company? Again, this is not financial advice because I'm an accountant, not a financial advisor. But inside the investment company, you can hold stocks, ETFs, gilts, bonds, index funds, money market funds, corporate treasury assets, long-term savings, IP, brand content, patents, although you can put those in a separate company, property SPVs underneath it, and it becomes your family's vault, your financial armour, your long-term stability. So when should you not use an investment company? To keep this honest, here are cases where it's not worth it. If your trading company is tiny, no spare profit to invest. If you don't have a holding company yet, get that done first. If you're not serious about long-term wealth, this is a decade play, not a side hustle. If you want regulated investment advice, I don't give it. Again, I'm just an accountant. That's not my role. Speak to a financial advisor. I'm not telling you what to invest in. I'm showing you how the structure I've seen so many wealthy families use. I've seen successful directors use to build long-term stability outside the trading companies. So always get regulated financial advice when choosing actual investment products. This is about the structure, not stock picking. An investment company is the most strategic way to build long-term wealth without mixing it into your trading risk. Separate where you work from where you build wealth. That's the strategy. that's the play. If you want me and my team to map out your company's structure and show you exactly where an investment company fits into your plan, use the link in the description below to book on to mine or the team's calendar. And if you haven't already bought it, get the tax game plan, that's in the description as well. It's £9 and it's your foundation to starting your business right.